Hi all, welcome to i-tutor Academy. In today's session, we will start with the Unit 8 subsection 5 of MMPC 010, that is direct cost and indirect cost. So there are some costs which can be directly attributed to production of a given product, the use of raw material, labor input and machine time involved in the production of each unit can usually be determined. On the other hand, there are certain costs like stationery and other office and administrative expenses, electricity charges, depreciation of plant and buildings, and other such expenses that cannot easily and accurately be separated and attribute to individual unit of production except on arbitrary basis. So when referring to the separable cost of first category accounts, call them the direct or prime cost per unit. The accounts refer to the joint cost of the second category as indirect or overhead cost. Direct and indirect cost are not exactly synonymous to what economist refers to as variable cost and fixed cost. The criterion used by the economist to divide cost into either fixed or variable is whether or not the cost varies with the level of output, whereas the accountant divides the cost on the basis of whether or not the cost is separable with respect to the production of individual output units. And the accounting statements often divide overhead expenses into variable overhead and fixed overhead categories. If the variable overhead expenses per unit are added to the direct cost per unit, so we arrive at what economists call as average variable cost. And next is separable cost and common cost. Cost can also be classified on the basis of their traceability. The cost that can be easily attributed to a product, a division, or a process are called separable cost. On the other hand, common costs are those which cannot be traced to any one unit of operation. Example, in a multiple product frame, the cost of raw material may be separable or traceable product wise, but electricity charges may not be separable product wise. And in a university, the salary of a vice chancellor is not separable department wise, but the salary of teachers can be separable department wise. The separable and common costs are also refers to as a direct and indirect cost respectively. The distinction between direct and indirect cost is of particular significance in a multi product frame for setting up economic prices for different products. Next is total cost, average cost and marginal cost. So what is total cost? That is TC of a frame is the sum total of all the explicit and implicit expenditures incurred for producing a given level of output. It represents the money value of the total resources required for production of goods and services. For example, a shoemaker total cost will include the amount she spent on leather, thread, rent for her or his workshop, interest on borrowed capital, wages and salaries of employees, etc., and the amount she charges for her or his service and funds invested in the business. The total cost concept is useful in break even analysis and finding out whether a firm is making profit or not. Next is average cost. AC is the cost per unit of output, that is average cost equals the total cost divided by the number of unit produced. And if TC is equal to 500 and N is equal to 50 and then AC is equal to 10. And the average cost concept is significant for calculating the per unit profit. Next is marginal cost, MZ, refers to the change in total cost associated with a 1 unit change in output. Marginal cost is the extra cost of producing one additional unit at a given level of output. One examines the additional cost being incurred in producing one extra unit and this yields the marginal cost. For example, if TC of producing 100 unit is 10,000 and the TC of producing 101 unit is 1050, then MC at N is equal to 101 equals 50. And this cost concept is significant to short-term decision about profit maximizing rates of output. For example, is an automobile manufacturing plant. The marginal cost of making one addition car per production period would be the labor, material, and energy cost directly associated with that extra car. And marginal cost is that subcategories of incremental cost in the sense that the incremental cost may include both fixed cost and marginal cost. And however, when production is not conceived in small units, management will be interested in incremental cost instead of marginal cost. Example is here. Please go through it from your IGNOU study material. And next is the marginal and incremental cost concept are needed in deciding whether a firm need to expand its production or not. In fact, the relevant cost to be considered will depend upon the situation or production problem faced by the manager. Next is fixed cost and variable cost. Fixed costs are that part of the total cost of the firm which does not change with the output. Expenditure on depreciation, rent of land and buildings, property tax, and interest payment on bonds and are example of fixed cost. Given a capacity, fixed costs remain the same irrespective of actual output. And variable cost, on the other hand, change with changes in output. Example of variable cost are wages and expenses on raw material. However, it is not very easy to classify all costs into fixed and variable. And there are some costs which fall between these extremes, and they are called semi-variable cost. And they are neither perfectly variable nor absolutely fixed in relations to changes in output. For example, part of the depreciation charges is fixed and part variable. However, it is very difficult to determine how much of depreciation cost is due to the technical obsolescence of asset and hence fixed cost, and how much is due to the use of equipment and hence variable cost. Nevertheless, it does not mean that it is not useful to classify cost into fixed and variable. This distinction is of great value in break-even analysis and pricing decision. And for decision making purpose, in general, it is the variable cost which is relevant and not the fixed cost. To an economist, the fixed costs are overhead cost, and to an accountant, these are indirect costs. When the output goes up and the fixed cost per unit of output comes down, as the total fixed cost is divided between large unit of output. Okay, next section subsection we will discuss on next video. So this is about today's section, and in between any doubts you can contact us anytime. And for more MBA series, you just do like, share and subscribe our channel. Thank you so much.
i-tutor Academy presents IGNOU MBA Complete Syllabus Coverage Classes for individual students, semester-wise subject with online flexible timing. For more details, contact on +91 623 827 1885